Welcome back, everyone. Today we're diving into some really dynamic trends in the crypto world. Stablecoins on the rise, Bitcoin investors shifting their strategies, and a whole lot of regulatory action.
Absolutely, it's a whirlwind out there. So what's catching your eye first?
Let's start with stablecoins. In July, the market added about $4 billion in supply, bringing the overall market cap above $250 billion.
Yeah,
And this surge happened right after the Genius Act was passed into law, setting up a regulatory framework for stablecoins that's being seen as a major win.
interesting that the Genius Act didn't allow issuers to pay interest, right? That was a big debate point, especially from the likes of Coinbase's CEO.
Exactly. It's like they intentionally um, sidestepped that issue to focus on stability and regulatory clarity. This has given a boost to investor confidence, and we're also seeing increased activity with over 38 million monthly active addresses, which is a jump of more than 20% from previous periods.
So, folks aren't just holding stablecoins, they're actively trading and using them. That's a strong signal. What about Bitcoin, though?
Oh, Bitcoin is really putting on a show. Bitcoin exchange reserves were down by 2% in July, continuing a trend since January.
Right?
And get this, it's now the first time since 2018 that less than 15% of Bitcoin is actually on exchanges.
That's huge, because it means investors are pulling their coins off exchanges, likely holding for the long term. It even talks about a potential supply shock if demand stays high with less available supply.
Yes, definitely. It's almost like a slow burn where everyone is um, quietly storing away their Bitcoin on personal wallets or OTC desks, anticipating a rally or maybe more volatility on the horizon.
And speaking of volatility, some analysts have pointed out that such trends might actually indicate decreased trading activity, which could be a sign that people are less confident in short term fluctuations.
Precisely, though that might also be interpreted as investors gearing up for significant moves later. Now, moving on to another key topic, tokenized real world assets or RWAs.
Ah, yes, the tokenized RWAS beat. What's happening there?
The total on chain value of tokenized RWAs grew by around 2.6% in July. And get this, it's now surpassed $25 billion, with tokenized private credit and even US Treasury debt driving a
Right.
260% growth year to date. It shows that traditional finance elements are increasingly merging with blockchain technology.
That makes sense, especially with firms now embracing tokenized stocks too, like what Robinhood's been doing. But do you think there are some legal red flags on the horizon with these tokenized assets?
That's a fair critique. While tokenized stocks are indeed fascinating, growing 15% to over $400 million in just 1 month, there's still a lot of regulatory uncertainty.
Yes.
Issues around investor protection and the rights given to token holders remain unresolved in some jurisdictions, which could hinder broader adoption.
So it's like innovative but still experimental territory, right?
Exactly. It's like um, stepping into uncharted waters where innovation is rapid, but the legal frameworks as of now are still catching up. Now, add on top of that multiple US states, Missouri, New Hampshire, Oregon, all passed crypto laws. And interestingly, Arizona chose to veto a crypto reserve bill. Really showcases the patchwork nature of regulatory approaches in the states.
Right, and it's not just in the US either. Internationally, 7 countries have recently rolled out licensing frameworks, like Hong Kong finalizing rules for stablecoins, and European giants like Bybit and OKX getting licenses under MyCA.
Exactly. And even Ripple and Circle are in the race for banking licenses here in the US. It's like every regulatory body is trying to figure out how to best harness crypto's potential while keeping risks in
Yeah.
check.
Let me ask, you mentioned earlier that Bitcoin reserve trends might indicate long-term sentiment. Some people argue that lower exchange reserves actually denote caution and uncertainty. What's your take?
That's a great point. One perspective is that the lower reserves could indeed signal that investors are bracing for volatility rather than positive movement. But another angle is that they're essentially storing value for the future and not just trading for short term gains. I think it's a bit of both, a cautious optimism, if you will.
I can see that. With volatility always being a part of crypto, it makes sense that people are balancing both risk management and a hunger for gains.
Right. And the fact that we're seeing these massive moves in both stablecoins and Bitcoin basically underlines a growing maturity in the market. Investors are differentiating between using crypto as a trading asset versus a store of value.
And it's really fascinating when you consider the broader picture with real-world adoption scaling up. Tokenized assets, more focused regulations, it all seems interlinked.
Absolutely, it's like different layers of the market coming together. On one level, you have regulatory moves like the Genius Act, which are legitimizing industries like stablecoins. And on another, you have investor behaviors that hint at strong long-term belief in crypto's value.
Yep, and if these trends continue, we might see an even more robust ecosystem where innovation and compliance actually coexist nicely.
That's the hope? Yes. Though, I do wonder if the rapid pace of regulation might also stifle some of the creative aspects of crypto innovation.
Mhm.
There's always that delicate balance between ensuring safety and not hindering progress.
Totally. I appreciate that nuanced view. It shows that while the landscape is promising, there are also inherent challenges that need careful management.
Right? And it's these very challenges that keep the conversation in crypto so lively. The interplay between technology, finance, and regulation is constantly evolving, making it really exciting to follow.
Absolutely, and as we see more traditional financial systems dipping their toes in, like with tokenized stocks and banks seeking crypto licenses, it's all converging to create a richer ecosystem.
Precisely. It's like the classic tug of war between forward-thinking tech and established regulations. Both sides are learning to negotiate their roles and responsibilities in this space.
Yeah, and sometimes the regulation can push innovation even further, making companies come up with smarter solutions. That's where we've seen stablecoins really take off after previous hesitations.
Exactly. It's a win-win scenario for all parties if done right. Investors gain more confidence, firms see broader adoption, and the market matures overall. Even if some critics argue that tighter controls might slow down innovation, the protective aspect could be what drives mainstream adoption eventually.
Right, because trust is key when you're dealing with big sums and widespread public interest. Which brings us back to the idea that the move of Bitcoin off exchanges, indicating long-term holding, might be just another facet of that trust-building process.
Exactly. It's like every element, from the stablecoin regulations to the diminishing Bitcoin reserves and the growth in tokenized assets, weaves together to form a more resilient market fabric.
Absolutely. And watching these trends, regulatory clarity, evolving investor behavior, and such rapid growth, it really gives you a glimpse into where crypto might be headed next.
Right, it's definitely a moment of transformation. There's a lot of energy in the market right now, and it'll be fascinating to see how these trends play out in the coming months.
For sure. It seems like both stablecoins and Bitcoin are on unique trajectories, one bolstered by new legal frameworks, and the other by a strong underlying confidence signal from reduced exchange supplies.
Right. And as the crypto world continues to evolve, whether in the US with more crypto laws or internationally with novel licensing regimes, it'll be crucial for all stakeholders to keep a close watch and adapt accordingly.
Yes,
Thanks for the engrossing chat. Always enlightening to dissect these trends together.
indeed, it's been a thought-provoking session. Until next time, stay curious and keep exploring these dynamic shifts in the crypto realm.